So the dollar is a reflection of economic strength or weakness. So if we're expecting stronger rates of growth going into 2024, that should augur for a bit of a rally in the dollar, especially from these more oversold levels. So if the dollar begins to rally, that could be one of the catalysts that helps yank some of that money out of the markets here. Some of this recent advance that we've had gets pulled back here. But this is what you need to know before the bell this morning. One of the things that has been interesting about this market advance over the course of the last couple of weeks, since the beginning of November, is the other asset classes that are helping drive that market. And one of those is the dollar. So, if you remember back in July, August, September, October, markets peaked back in July. We sold off in August, September, and October, and that sell-off in the market, here's the bottom in the dollar back in July, and that was the peak of the stock market back in July. And then as the dollar strengthened, right, the market sold off. So we're having this very strong rally in the dollar, and that led to that strong sell-off in equities through the very end of October. Then at the end of October, the dollar peaked in that rally, has been selling off here over the last couple of months, and we've retraced a lot of that advance that we saw in the dollar over the summer. So the dollar's weakened here markedly, very oversold here. And this is kind of a key point. So if the dollar starts to rally as we go into next year, so here's the thing about the dollar. So the dollar is a reflection of economic strength or weakness. So if everybody believes that the economy is about to turn the corner, and we've had weaker economic growth this quarter, so in third quarter, August, September, October, we had that really strong spat of economic growth, which not surprisingly led to a stronger dollar. Now we've had weaker rates of economic growth here over the last couple of months, looking at a slower rate of GDP growth in the fourth quarter than we saw in the third quarter. So that kind of aligns with this sell-off in the dollar. So if we're expecting stronger rates of growth going into 2024, right, that should augur for a bit of a rally in the dollar, especially from these more oversold levels. So if the dollar begins to rally, that could be one of the catalysts that helps yank some of that money out of the markets here. Some of this recent advance that we've had gets pulled back here a bit. So again, one thing that we're just trying to look at is looking at, yes, you take a look at the market itself, as we talked about here over the last couple of days, extremely stretched, overbought on multiple levels, and very deviated from longer term moving averages. So it just, as we talked about before, these deviations, when prices get too far stretched above moving averages, those moving averages kind of act like gravity and pull prices back, but you need a catalyst to make that happen. Right now you have a lot of exuberance. Nobody wants to get left out of the markets, right? So we're all piling in here at the top of the market, which is normally the case. But looking at some of these other asset classes, bond yields, which are extremely overbought now, those need to have a bit of a pullback here. We need to see yields probably rise up to above 4% again. The dollar strengthens here on a rally. Some of the data comes a little bit stronger than expected, so we see some inflationary pressures, which bring up yields. We see a little bit stronger economic growth data in the first quarter, maybe stronger retail sales over the holidays. That brings the dollar up on some renewed hopes for economic strength, right? And that's going to pull some of that tailwind out of stock. So again, there's a lot of reasons why this market can have a bit of a correction, but again, things can stay overbought longer than they seem. But again, the risk here is that markets are going to pull back probably sometime within the first couple of months of next year. So just again, as we were saying earlier, think about risk reward and how you're managing your portfolio right now. That's what you need to know before the bell this morning.